The wild ride for U.S. stocks has top Wall Street strategists getting bearish. It's also influencing the money flows, with ETF money shifting from the U.S. to Canada, where some argue the TSX is trading at bargain levels. Those are this week's market moves. Let's dive in. Well, let's start with the wild ride for stocks, which has prompted some of the big Wall Street firms to lower their year-end expectations for stocks. According to a new Bloomberg survey of more than 20 strategists, the S&P 500 is now expected to end the year just shy of the 6,050 level. Now, that's down from a consensus call last month that was north of 6,500. Bloomberg notes firms like JP Morgan, Bank of America, and Oppenheimer have been among the most negative, citing concerns around how tariffs will impact the economy and inflation. Now, with this new target, the S&P 500 would still finish the year in positive territory, but it would be the worst year of performance for U.S. stocks since 2022. Now, as for the Canadian stock market, its current valuation could limit downside risk, according to strategists at Bloomberg. In a new report, Bloomberg finds that roughly 75% of TSX-listed stocks are currently trading below their pre-COVID valuations. They say energy and materials are the most undervalued stocks, while discretionary and communication-related stocks are also relatively cheap. And finally, this dynamic of interesting stock market opportunities beyond the US has influenced ETF flows this year. New research from Bloomberg analysts found that global ETF investors are allocating less money to the US than they have in the past. For Canadian ETF investors, as an example, flows are down to around 38% this year versus 51% last year. And in Europe, they're down to 3% versus around 48% last year. Now, whether this is the start of a larger trend remains to be seen. As Bloomberg notes, more than 70% of global ETF assets are still tied to the US market. Those are our market moves for this week. Thanks for watching. What market moves are you watching? Let us know in the comments. Don't forget to like and subscribe, and we'll see you next week.